Good morning and welcome to the macro report for the week beginning the 9th of October 2017. After last week's really big news, and I'll certainly pick up on that in this video, this week is all around the surveys. And I don't normally like to look at the surveys because they're not a really decent sample size. They are certainly an interesting fact, but they are clearly becoming more and more important. And that's the NAB business confidence, and then you've got the Westpac consumer confidence. And the reason for it, as I alluded to in my last week's piece, last week was a really big changer in terms of what we actually saw from expectations for 2018 and how finely tuned consumers particularly are around rate rises and around the possibility, let alone it actually happening, which makes Westpac's consumer confidence coming up this week probably the most important part to look at. They already have told you for the last 10 consecutive months that the reason the Australian consumer is quite pessimistic is around basically things like household consumption, household finances, employment, wage growth, also around basically just stability in general. All of that clearly is going to come through, and I think that needs to be put into it. What we saw in the retail sales last week was one of the worst reads we've seen in 5 years on a double month, and it's the worst read on a single month in 4 years. All that shows that that is filtering through. What Westpac has been telling you around confidence and why we're pessimistic is actually now filtering through into actuals. And that therefore brings to the other side of the equation is business confidence. Business confidence has been booming. The conditions have actually been at the highest level in the survey's history. However, last month, confidence in business fell away quite sharply, and they were alluding to the idea that in the previous month, and we're talking about July here for their, looking into August, was around the fact that we did have things like North Korea going on, there was some instability going on in the US, all that sort of filtered in to the reasoning behind it there. If it holds true again in September though, you can start alluding to the fact that a lot of the talk last month was around rate rises. And business has been doing quite well and expecting to actually put capital expenditure out into the market on the back of the idea that they were likely to continue to see some fairly rosy economic conditions. So with that in mind, they're the things to watch this week. It just, again, it gives you more forward guidance on the idea that, you know, the figures that we've been talking about, GDP, employment, consumption, etc., retail sales, that's what it explains to, is all moving in that direction. And I think that's why if you want to get a gauge of what Q4 is going to look like, the last 2 weeks, last week and this week, will give you that movement. And then next week, when we look into the employment numbers, all that can really collate to see realistically what 2018 will look like, whether or not the RBA is going to get involved, and whether or not our market continues to be the really underperformer that it is, because we are stuck in a rut at the moment. And unless we can break out, Australia is going to underperform.